Going to do is we're going to record what we call journal entries. What a journal is, and this is step one in the accounting process, what we call the accounting cycle. And journal entries are simply a list of transactions. So again, to know this, you got to remember, and you might want to keep referring back to this, that assets, expenses, and dividends are debit accounts. Increase them, you debit them. To decrease them, you credit them. Credits are liabilities, stockholders' equity, and revenue. So to increase them, you credit them. To decrease them, you debit them. And if you mix it up, which students do, it's the most common mistake, and it leads to all kinds of problems, then everything gets all wrong. So be very careful that you know this. If there's one thing you want to really focus on, making sure that you know, it's the simple chart in which the credits and the debits are. Let me show you an example of a journal entry, and this is actually a formal a style that almost all accountants use. We have the same transactions again, but how would you record them in a journal? Doogie's Dog Grooming Corporation began by issuing 1,000 shares of common stock in exchange for $30,000 cash. So first thing to do is to say what happened to cash. We got $30,000 cash. Cash is an asset account, which is a debit account. So to increase it, what are you going to do to it? You're going to debit it for $30,000. So what I do is I write the name of the account, flush left, and I write the amount in the debit column. Now, the thing is, you can only write a journal entry if the debits equal the credits, because every transaction, liabilities must equal stockholders' equity. Assets must equal liabilities plus stockholders' equity, and that balance must always be maintained. And we said that total debits must always equal total credits. So when you record a journal entry, you've got to have the debits and the credits. Transactions always have these two pieces, at least two pieces to them. The other side of this, remember, was common stock. Common stock increased by $30,000. So I would credit common stock by writing $30,000 in the credit column and writing the name of the account, common stock, in this section, in this column. When I write the names of the accounts, by the way, it's common to write the names of the accounts you're debiting on the higher lines and the names of the accounts that you're crediting on the lower lines. It's also common to indent the credited accounts like this. So there's a little space before the name of the account that you're going to credit. And there's always two columns, debit, credit. Computers do things a little differently. A typical computer program would have one column, and then they would show debits as positives and credits as negatives, is what a lot of computer software does. Even programs like QuickBooks, sometimes they don't say debits and credits. They just say they have a different. I don't really want to explain how they do it, but they try to sometimes not use their terms because it scares people who didn't take accounting. Doogie purchased a grooming table and other equipment for $18,000 cash. So if we were just to talk about cash, because there's cash there, right? Is $18,000 cash coming in or out? Cash is going up or down? Cash is going down, so I'm going to, it's an asset, so what am I going to do to it? Debit it or credit it. Cash is going down, so what am I going to do to it? Credit it. And cash is always like this. To increase cash, debit. To decrease cash, you credit it. Increase cash, debit. Decrease cash, credit. It's the opposite of what you would think. I'll explain why in a second. So you're going to credit cash for $18,000. The debit, what's the other account that's involved here? Do you remember? The other account was equipment. Equipment happens to be, I'm just going to write this for your reference, happens to be an asset. An asset is a debit or a credit account. The debit account, so you're going to increase equipment, an asset, by $18,000. I'll write it here, asset plus. And cash is an asset also, right? So I'm going to write here, asset minus, because it's an asset going down. And that's the format of journal entries. And normally they don't have this little piece here, but I'm going to write it in to help you. Questions so far? Yeah.
So no matter whether you're crediting or debiting the account, like the specific account like cash, it's not going to say whether it's a credit or debit account. You just have to know that?
Yeah.
Okay.
Like cash, you should know it's an asset, it's a debit account.
Yeah.
Accounts payable is a liability, it's a credit account. And you really need to know which accounts are which is what we did in this activity above.
Okay, but there's no there's no way like you could like cash can be either credited or debited. It doesn't matter which, if it's on the top or bottom line. It just matters whether it's going up or down. There's no way to tell,
if you need to increase cash, you debit it. If you need to decrease cash, you credit it.
Yeah, but there's no way to tell like something more like advanced, like equipment.
Equipment is what kind of account?
It's an asset.
So what are you going to do to it to increase it?
Debit it.
To decrease it?
And credit it. Yeah, but you would just have to know that it's an asset. It wouldn't be like.
Yeah.
So if I was looking at something longer, like one of the larger companies, I would just have to assume whether it's like an asset or.
It just becomes second nature after a while. Okay. Like crediting a liability increases it. If you've been doing it a little while, like by the time you're intermediate, by the time students are intermediate accounting, it should be second nature to them. When you credit a revenue, it increases. When you debit a revenue, it decreases, and things like that. And students, it should really be second nature by the time someone's in up to Chapter 4 in intermediate accounting. Is kind of how it works, and it's just something all accountants have figured out. Let me just clear up one little confusion thing. Is okay, when your bank account is credited, when they credit your bank account, it increases. Why is that? The bank, you call the bank and they say we're going to credit your account for $100, and the balance goes up. I just said when you credit cash, what happens? It goes down. What kind of account is your bank account on the bank's books? The books of the bank. What kind of account is your bank account? It's not cash. It's a liability because they owe you money, right? So if I have $1,000 in my bank account, the bank has a $1,000 liability to me. Therefore, that's a credit account. So when they credit my account, it increases. When I debit my account with my debit card, what happens to my bank balance? It goes down because I'm debiting a credit account. You see? That's why you have that lexicon in the bank when they say we're going to credit your account. That means they increase it. But from our side, and remember this, that one man's liability is another man's asset. Right? Their liability to me is my cash account. So here's another one. Doogie purchased a one-year insurance policy for $2,400 cash. What happened to cash? Cash went up or down? Down. So therefore I'm going to credit it. So I'm going to credit cash. That's an asset going down. And then you normally don't write asset going down, but I'm doing it for you. And now what's the debit going to be? You remember what account it was? It was prepaid insurance, which we said was an asset. So I'm going to say here, I'll write here asset. And what happens when you debit an asset? It increases. So I'm going to increase prepaid insurance. And a nice way to think about this is I'm taking $2,400 out of cash and putting it into prepaid insurance, going from one asset to another. Here's the easy one. Doogie ordered doggy treats and other supplies totaling $1,200. No transaction. Very nice. The doggy treats and other supplies arrive along with a bill for $1,200. What happened to cash? Did we pay any cash? No, we're not paying it yet. Just because I got a bill doesn't mean I have to pay it, right? So then what is one other account that's involved here? Supplies inventory, right? What kind of account is supply inventory? an asset. And what direction is it going in? It's going up. So it's an asset going up. What am I going to do to it? Debit it. So I got supply inventory here. That's an asset going up. Therefore, I'm going to debit it for $1,200. And then I've got the other account here. What other account was involved? Do you remember? Accounts payable was involved. So that must be the other account. But we want to make sure, of course, accounts payable is the other account, and that's a liability. Is accounts payable going up or down? Up. So when a liability goes up, what do we do to it? We credit it. And by the way, it always works out. So if you're wondering, like, what if you don't have accounts for both of them or they don't balance, it always works out. Been doing this, I don't know how many years. Doogies provided dog grooming services for $20,000 cash. What happened to cash? Cash increased or decreased? Oh, cool. I just discovered that if you do the touchpad with 2 fingers, it will scroll. Cash is increasing, right? So what am I going to do to it? Debit it or credit it? Debit cash to increase it. So I write it, and then what's the other account here? This is tricky. It's going to increase stockholders' equity. The name of the account is revenue. So that is a revenue account, and it's also stockholders' equity. They're both going up. Remember, revenue was an account. Look back at your chart of accounts on activity 84. Revenue was an account. If it's in that chart of accounts, you can use it. Next of all, July 31st, Doogie paid wages of $2,000 and rent of $1,500. So I wrote this one item here, rent expense, $1,500. It's being debited because it's an expense. Remember, expenses are debit accounts, and it's also decreasing stockholders' equity. Expense accounts, debiting does what to them? What does debiting an expense account do? Increase or decrease? Expense account is like an asset. Remember, look back here. Expenses are debit accounts, so to increase them, what am I going to do to them, David? I'm going to debit them. How about wage expense? Wage expense was $2,000. Is that debited or credited? It's going to be debited, just like wage expense. Again, remember, this is an expense, so I'm going to increase it, I've got to debit it, because expense is a debit account. The other piece of this is cash. Is cash going up or down? Down. Cash is going down by $3,500. So what am I going to do to it? Right. I'm going to credit cash, an asset, going down for $3,500. I want you to try the last one. Doogie paid $400 cash dividend to shareholders. Cash is going up or down? Cash is going down. Therefore, what do we do to it? We're going to credit cash. Leave a space. Credit cash, asset for $400. That's going to decrease cash. And what is the debit going to go to? Increase. It's going to go to dividends. And dividends is what kind of account? Debit or credit? It's a debit account, so debiting it is going to increase it. See, dividends is right over here. So I debited dividends, and that's going to increase it. This journal entry thing is really important, and if you look back at previous exams, I think it's been on every one of them. So it's something you really got to know.